What's up everybody? Nate here. So the United States economy has been in a really weird place over the last few years. We've seen our economy and the stock market set new record highs in 2020 only to fall into a recession by the end of that same year. And then we've also seen inflation go way through the roof and the cost of everything get way out of control due to demand. And right now our economy seems to be in limbo. It's not growing super quickly, but it's also not tanking into recession territory yet. Well, according to the CEO of JP Morgan Chase, Jamie Dimon, that might end very soon. Jamie Dimon is sounding the alarm on our economy right now, and according to him, there are three major things that will shape our economy and the future of the United States over the next few decades. Here are the three things that Jamie Dimon is talking about. Number one, the United States and its economic recovery from the pandemic. Number two, inflation and interest rates. Depending on which direction that takes will have a huge impact on our economy. And of course, number three, the Russia-Ukraine war, the possible outcomes and repercussions of that conflict. He believes that what we're going through right now is dramatically different than what we have seen in the past. And because of that, we are facing some risks that we have never seen before. So today, I want to talk all about the three things that Jamie Dimon says are going to have the biggest impact on our economy and world economy over the next several decades. We're going to go over how this has all shaped our economy over the last few years and how it's going to shape our economy in the near to distant future. And of course, is there anything we can do about it? But before I get into all of that, do me a quick favor and hit, smash, or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now let's talk all about Jamie Dimon and his three warnings for our US economy and the world economy for the next few years. So first, I want to mention a few quotes that Jamie Dimon said himself that will kind of bring a little bit more perspective on this issue. Jamie Dimon recently said, quote, "Each of these three factors mentioned above is unique in its own right. The dramatic stimulus-fueled recovery from the COVID-19 pandemic, the likely need for rapid rising rates, and the required reversal of quantitative easing, and the war in Ukraine and the sanctions on Russia." He also went on to say, quote, "They present completely different circumstances than what we've experienced in the past, and their confluence may dramatically increase the risks ahead. While it is possible and hopeful that all of these events will have peaceful resolutions, we should prepare for the potential negative outcomes." Now we'll get back to some other quotes by Jamie Dimon in a second here, but let's start discussing what he means by the recovering pandemic in the United States. Obviously, the entire world has changed because of the pandemic over the last few years. Nobody really knew what was going to happen with the pandemic back in 2020, and the federal government printed trillions of dollars in response to that. Not only that, but the Federal Reserve had a quantitative easing program, pumping trillions of dollars into the New York Stock Exchange in order to bolster it. Jamie Dimon says on this measure that, quote, "The Federal Reserve and the government did the right thing by taking bold, dramatic steps following the misfortune unleashed by the pandemic. In hindsight, it worked. But also in hindsight, the medicine was probably too much and lasted too long." So this kind of goes into exactly what a lot of economic scholars and investors have been saying about the Federal Reserve and inflation over the last few years. In order to get ourselves out of the mess of the pandemic, the federal government printed so much money so Americans could go out and spend. Now that created a lot of demand for just about everything. We're talking homes, we're talking groceries, we're talking consumer goods and services. America plunged into a recession, and then it came out of that same recession faster than we have ever seen in American history. All of that is because of money printing. However, what Jamie Dimon is arguing, and a lot of other experts have said in the past, is that this went on for way too long. The Federal Reserve and the United States federal government should have cut all of this off way sooner. Inflation simply means that the monetary supply of a country is increasing. And that definitely is true. The federal government printed so much additional dollars that now so many more people have money that the value of every dollar starts to decrease. That means your buying power for for every dollar goes down as well. So Americans now need a lot more money because businesses are charging a higher price. And this all leads into supply and demand. If so many people want so many more things, then businesses have to offer that. They have to make more, but they can't make more if they don't have more. They have to hire more workers and build more resources and eventually start making more in order to meet demand. There was just way too much money in our economy though, and this went on for a very long time with additional supply chain issues because of economic lockdowns. There was just way too much spending, and what Jamie Dimon believes is this went on for far too long. Now, in order to kind of get this all situated so our economy survives in the future, as a country we need to cut back on spending. The Federal Reserve is now doing what it can about inflation, and we'll get into that in a second, but overall, the United States can't just throw this much money at a problem in the future. They have to be very strategic with their spending, because what he's saying is that if this continues in the future and these easy money policies with free money are the only solution that governments can come up with, then our entire economy and world economy is going to run into some issues. You can't just print your way out of everything, and while the United States government has pretty much done this in the past, eventually, as we've seen with other countries, this becomes a problem that eventually leads to their demise. Now let's talk about the issue of inflation and interest rates specifically. Jamie Dimon said on the issue, quote, "I do not envy the Fed for what it must do next. The stronger the recovery, the higher the rates that follow. I believe that this could be significantly higher than markets expect, and the stronger the quantitative tightening. If the Fed gets it right, we can have years of growth and inflation will eventually start to recede. In any event, this process will cause lots of consternation and very volatile markets. The Fed should not worry about volatile markets unless they affect the actual economy. A strong economy trumps market volatility." This is exactly what we are seeing right now as the Federal Reserve talks about getting aggressive with inflation. I put out a video the other day about the Federal Reserve making a new announcement about raising their benchmark interest rates by 50 basis points or more at their next meeting in May. Right after this announcement, the stock market essentially went down by a few percentage points. The reason for that is because the stock market is extremely emotional. They don't want to lose any money ever. So when they talk about the Federal Reserve raising interest rates very quickly and getting serious about their quantitative easing and tightening of their balance sheet, well, that means less money for our economy and a lot less demand. Americans won't be spending as much, so these businesses aren't going to have as much money to spend either. And of course, with quantitative easing ending, there's not going to be as much free money being poured into the economy, so businesses can't be risky to make even more money. Obviously, investors and markets are not going to like that, so it makes a lot of sense that the stock market is going down. But if the economy is recovering in general, then that is a good thing. What I think Jamie Dimon is talking about here in terms of risk is what if inflation doesn't go down? Now, in this situation, demand in our economy would continue and supply chain issues would get even worse. If businesses can't meet the demand of consumers, then inflation is going to continue to go up. Once that is resolved though, then inflation should come down as well. If Americans have a hard time spending money because interest rates are so high, then yeah, demand is going to come down too. But what Jamie Dimon is worried about is something called stagflation. When you have inflation going through the roof, but your economy and economic output is actually shrinking. This occurs when Americans are not actually able to spend any money. So the shelves are empty, but Americans have money, so what they do is spend less and save. That's bad for our economy. We can't have an entire generation of people saving money. We need them to spend a little bit of money so our businesses can grow. But it also means that prices are going to go up because anytime the shelves are full, Americans buy everything. Everything is in short supply, but you're still not making enough to really grow. If stagflation continues, then the Federal Reserve is going to have to keep interest rates higher because they can't loosen things up, because that's just going to mean that Americans spend even more. But there's not really enough to buy right now. So interest rates are going to have to continue to go up in the United States, which means the housing market is going to take a hit and the stock market is going to take a hit and Americans aren't going to have as much. That means our economy can go in one of two ways. It's either going to start shrinking dramatically dramatically and cause a recession, or it's going to slowly start growing, and other countries around the world are going to outpace us for that growth. And finally, let's talk all about the Russia-Ukraine conflict. Now, since February of 2022, Russia and Ukraine have been engaged in a war. That has led to many economic sanctions on Russia because Russia is the aggressor here. They invaded Ukraine with little to no reason, and now the entire rest of the world is showing them that they disapprove with economic sanctions. This at one point meant that the Russian ruble, their equivalent of the dollar, fell dramatically in value, and at one point was worth less than 1 US cent. Now the ruble has recovered quite a bit, but the entire economy of Russia has collapsed. This has led to a furthering of inflation in our economy because Russia holds a ton of resources like oil and natural gas, a lot of precious metals, and of course, wheat. With them being such a big supplier of all of those things and the United States needing a lot of those materials, well, we are simply running into another supply and demand issue. Jamie Dimon said, quote, "We expect the fallout from the war and resulting sanctions to reduce Russia's GDP by 12.5% by mid-year, a decline worse than the 10% drop after the 1998 default. Our economists currently think that the euro area, highly dependent on Russia for oil and gas, will see GDP growth of around 2% in 2022, instead of the elevated 4.5% pace we had expected just 6 weeks ago. By contrast, they expect the US economy to advance roughly 2.5% versus a previously estimated 3%. But I caution these estimates are based upon a fairly static view of the war in Ukraine and the sanctions now in place. So basically, if sanctions get worse and the war in Ukraine gets even worse, then our economic growth in the United States and across the world could be a lot smaller. A lot less money is going to be circulating around, which means a lot less growth. Gas prices in the United States have gone way up because oil per barrel has also gone way up in price. This is because the entire war is disrupting supply chains, and Russia produces a ton of oil. The United States doesn't get a lot of oil from Russia, only around 6 to 8% of the amount we use every day. But that is hundreds of thousands of barrels that we now have to produce in our own country. And remember, the United States is not trying to produce more oil in the long term. We're actually trying to go all electric and find renewable energy resources. Jamie Dimon also believes that because of the whole Russia-Ukraine conflict, our entire supply chain system across the world needs to be restructured. And he says that some other smaller countries could start to fill the void of Russia and surrounding nations. There are so many different countries out in the world right now that have so many different resources, but they're trying to get into industries that are dominated by world superpowers. In particular, he calls to Brazil and Canada and Mexico to benefit from the supply chain issues and the restructuring that he thinks the world needs to do. The United States already gets a ton of oil from Mexico, and we might need to improve that in order to start getting gas prices lower in our own country. That could lead to a huge economic growth period for a lot of these countries as we stop relying so much on Russia and surrounding neighbors and start relying more on Canada and Mexico and Brazil. Jamie Dimon also believes that no matter what happens with the war in Ukraine, this has been a huge wake-up call for all other nations across the planet. He believes that we now need to create systems and plans for if something like this happens in the future. We have to prepare ourselves if the world superpower that many nations rely on suddenly goes rogue. So all of that being said, what exactly does this mean for the future of our economy and the world economy as we know it? Well, according to Jamie Dimon, depending on what we do over the next few months and years is going to shape our economy and world forever. If the Federal Reserve takes the right moves with inflation and we don't actually reach a period of stagflation in our economy, that means businesses and Americans can start growing again and things can get back to normal. The pandemic has hit an all-time low, and if that continues and we don't have massive virus outbreaks that cause economic lockdowns in the future, then that is overall good for our economy and country. And if there is a possibility that this war in Ukraine can end sooner rather than later, then that needs to happen. If that war continues and gets worse and other countries are eventually brought on board, then that is going to be catastrophic for not only economies, but for human life across the world. And if somehow things can start to go better in the future and take that optimistic look that Jamie Dimon currently has, well, then the United States and other countries need to start making plans. How are they going to defend against this in the future if it happens again, and how are they going to try to prevent it from happening at all? Strong economic policies and deals with other nations in order to get things going so that we don't face massive inflation and supply chain issues. Doing all of that will hopefully dramatically decrease all of the risks that we're facing in the United States and across the world. But one thing is clear, we are in a period of time right now in the United States that really anything can happen, which is why we all need to stay as educated and as informed as we possibly can, so that way we can be prepared for what comes next. But now I want to hear from you on this issue. What do you think about Jamie Dimon's 3 warnings for our United States economy and economies all throughout the world? Do you think that our world economy is facing some dramatic risks in 2022 and beyond? Or do you think that eventually everything is just going to level itself out and go back to what is considered normal? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.